check. Can you guys hear me? Hey, George, how are you? Carlos, Kevin, everyone. Okay, cool. Thank you very much. So again, my name is Marc Nicolas. I'm the founder of the Day Trading Zones. And also I'm a contributor of the Real Traders Webinar.com community and a co-founder of this project. I'm about a 21-year trader, 20-year trader. I started when I was about 21 years old. Trading is what I've done pretty much all my life. I started everyone in the prop environment. Prop shops are places where you go and there's a bunch of traders and you trade for the prop shop and you split the profits and they make money on your commissions and they make money on the split profit. I later was able to go from a prop shop called Endover Trading, which was a network of prop shop 10, 12 years ago, to their hedge fund arm, which was JP Capital, which was the owner of John Petak, which had an office in Fort Lauderdale, and traded and got to meet a lot of interesting people through those early years in professional trading. One of the most important thing in professional trading that I learned everybody earlier on is risk management and proper sizing and matrix. See, a lot of the new traders, when they come in place into the marketplace, they have no clue of what are the matrix, what are the proper sizes, what is a life expectancy to survive your trading. So what happened is the traders start trading and progressively and very quickly they go from $10,000 to $5,000 to $4,000, and then there's revenge trading and emotions coming in, like Norman mentioned, which is a very, very important aspect of trading. And then you end up having a situation where you might blow up your account. So what I'm going to do today is in about what? I have only 45 minutes, 50 minutes to share stuff with you. I'll try to have a live webinar. I do my live webinars every Tuesday at 12 o'clock, where I go live through charts and try to trade real money, show you real money examples always, is to show you today in a, yeah, like Charles says, in a very succinct, no BS way, some stuff that I learned on how you can master support and resistance. So whether you trade Forex, options, or futures, you got to master support and resistance, and you got to understand where you have a 68% chance to a 95% chance of success when you trade support and resistance. So we'll go to the next slide. And this bell curve took me about 5 years to understand in my trading process, everybody. When I first started trading, I was just trading with the prop firms, and I was always obliged, and as a matter of fact, the prop firms pushes you to trade, let's say, and I'm going to explain how the bell curve works here. If you have a stock that is worth $100 with a current price of $100, this is right there where I circled the current price. And we trader, when we trade, we know one probability. There's only one probability that we know as trader, everybody, is that we have a 50% chance of success. It's like throwing a coin. Either the market is going up, your way, or there it's going to go down, and take your stop. That's all you know. So what we as traders have to do is improve those probability of success from a 50% chance and bring them up to 68% to 95% chance of success. And the options world, a 68% chance of success or 95% chance of success, without making it complicated, is 1 or 2 standard deviations, everybody. And so nobody, what you have to understand, whatever you trade, everyone in this room, it doesn't matter what you trade, nobody puts a gun in your head to trade the current price. We have to find levels, we have to find support and resistance where we know that the shift of momentum, everybody, are going to be in your favor for 68% to a 95% chance of success, everybody. And this is key. So how do you find those levels? Number one, we do research and analysis for retail traders and prop firms, but we also do proprietary tools. The purpose of me explaining everything here is you have to overlay your own tools. So let's say you use moving average, you use Fibonacci lines, you use whatever you use, everybody. You got to overlay that with standard implied volatility in the options market. Why? Because it doesn't matter if you trade options or not, like Guy Cohen this morning mentioned that very well. It doesn't matter. The most astute players in the market are the options player, everybody. Whether you know that or whether you don't know that, all the pension funds, the hedge funds, every big players in the market are doing options. Every mutual funds also hedge themselves with options. So the options market is what we see as the most astute player, not what we call the newbies, not what we call the retail side, but the professional side. So if you understand on an option chain how to look at a 68 to a 95% chance of success with a delta is a very simple number on an option chain that is going to tell you which level of your stock, which level of your futures, and which level of your Forex, if you trade FXE as a substitute of, let's say, the 60, the Euro futures, the delta is the probability in the money. It's the correlation also with the underlying stock with the move of the options, and it's also the substitute of the stock for an option. I don't want to make it very complicated, but I want to give you basics. We are going to look at combining support and resistance and master support and resistance for whatever you trade today and try to help you. But in addition to that, you want to look at the option market to confirm your levels. And that, in addition to that, you want to overlay that with option strategies that have 68% to 95% chance of success. That might be time decay. There's a lot of great options educators and traders that will come after me today. There's Dan, there's Larry, and that will explain that even better. But I want you to understand the overlays that work. I trade every morning real money, and options market is one of the most powerful markets you'll find in the world. I'm going to show you this trade. Can everybody see this trade? I took the snapshot yesterday. There was a loser, there was a winner. The overall was $1,600. Quick yes, no. That was on an Apple move. Quick yes, no, everyone. If you look, if everybody has the Thinkorswim platform, you can understand that the mark is the current price. That was the current price of this option at $3. I bought this trade price at 40 cents yesterday. That was a 7.6 times your money. 7.6 times your money, everybody, yesterday on this trade. 7.6 times your money. So what I'm going to show you with support and resistance and some trade setup is you can reach some trade setup that can give you 68% to 95% chance of success, everybody, with everything that you trade. But in addition to that, I'd like you to think about thinking differently about your trading, okay, and have very pragmatic stuff coming into Monday to change the way you think of trading. How many of you are just futures trader, everybody? Anybody? Just futures trader? I think, guys, you have a features on Omnovia where you can do fit to screen. Just curious. Tell me if you trade futures or both, futures and options. Just curious to get a feel in the room. We have over 1,000 people. Just curious, both, futures. Great. So I'm going to show the futures player how you can control 2 ES by the end of this presentation, everybody. How you can control 2 ES with about $1,500 by buying the SPY weekly options. But that's not the point. Let's go back to the support and resistance. Can you guys see the next slide? Quick yes, no? Guy is right this morning. It takes a little while before it comes. So here's what happened. When you trade support and resistance, I use only 4 setup. But out of the 4 setup, whatever you trade, again, we have Forex players in this room, we have options players in this room, and we have futures players. For the past 20 years, I'm telling you I'm using only 2 setup, okay? 2 setup that I love, but 3 setup that have a higher statistical chance of success. So here's the mistake number one that most of the traders do when they trade support and resistance. What they do usually is they can see the support and they can see the resistance, everybody. But here's what they fail. If you go from support to resistance, you have higher highs, higher lows, higher highs, higher lows on the bid. You look at your time and sales and you see those higher bids. But here's what happened. Most of the traders fail at support and resistance because as soon as it reaches the resistance, they get out. That is not the bad part. The bad part is as soon as it gets to the resistance, not only they get out, but they get in a short. And what they don't understand is all the market players, the professionals, they know, let's say that this is a 1600 on the ES, okay? They know that if they push you a little bit more, let's say 1606 on the ES, they know they are going to take your stops, everybody. How do they know? Because they can read order flow. All the algorithms right now are reading order flows. That's why sometimes you see crazy moves. Like there was a Twitter about the White House being attacked. Boom! All the order flows and the algorithm went in. There was one day, I don't know if you saw, where Google was at 795 or something like this, and suddenly it dropped to 773 in a matter of a 5-minute candle. Has anybody saw that for the past few weeks? You see crazy stuff happen all the time. All the times, everyone. This is big, rigged market manipulations. This is like huge market manipulation. So the only way we, the small guys, can run around that is not only knowing where are the major support and resistance, like in our proprietary tools, the dashes, but you got to prepared. You need to prepare for the added margin of safety. You see, from that 1600 to the 1606, you want to buffer yourself with your option strategy or other strategies or trade setup to buffer for that move above the major support and resistance, because they always run them through. A lot of people were looking at the 1600 2 days ago. Guess what? Our tools were 95 and they went 96. They run through the round number. Why? Because the algorithm knows that you are going to hit the round numbers. They know that you'll put your stop loss around that round number. Maybe 2 points below. So if you trade the ES 1600, they'll go 1598. And boom, sure enough, they take you. Okay? So what you got to understand is the shift of momentum works like this. When they make their higher highs, higher lows, they number one run your stops through. Then they reach a point that is in physics, everybody, called a neutral point. Have you noticed, if you take, it's pure physics, everybody. If you take a ball and you throw that ball in the air, it's going to go up and up and up. That's your tape. That's the best way I can explain to you tape reading. So that ball, everybody, is going to go up, up, up. But the friction of the air is going to slow down the ball, everybody. When the ball is being slowed to a point called the neutral point, the physics is showing you what, essentially. And that's the exact same way how you can read your tape and read your charts for support and resistance. What is that, essentially, everyone? Quickly. If it reaches neutral point, where is that going? It's going where? So it's going up, it's going up. Where is that going? It's going down, everybody. It's going back down. So the most difficult point, the most difficult trade of any traders, you know, that's why they make fun to the people who try to pick up perfect bottom and perfect tops. The most difficult trade and the most gambling trade is this one. Do we all agree? Yes or no? Trying to pick up the top here. Try to pick up that high or that low below your support and resistance. But here's what happened, and this is where the market gives you a clue, everybody, on a tape reading basis, everybody, is when you cross above and now they recross down. Now they give you the confirmation. That's the same 1600. So here you have the sucker who put his stop loss at 1600 or 1602. They run him through. They go to the neutral point, and guess what? They cross and recross it back down. So now we not only get stopped, but now when it recross back through, even though it's the same price, everyone, guess what? Isn't it the best trade? Do you have confirmation now that the neutral point has reversed? Yes or no, everybody? So you had the neutral point. That's the perfect top, perfect bottom. It's the worst probability trade in trading. And now you cross and you recross back down. Now you had a shift of momentum. Okay? So now that's the time where you know that the market has reversed. And I'll show you in real charts with our stuff in a moment, so that you and I are going to go through many charts, and with the real live market on Tuesday, you guys will be with us for about 2 hours if you want. Come free. We do those chart blasts. I do them about once a month. And what happened is you want to look for that cross-recross, that trade setup number 2. Trade setup number 2 is more powerful than trade setup number 1, which I told you most of the traders lose from support to resistance. But here's my favorite 2 trade setup that I practically 75% of my trades are there. Okay, it's the cross, the recross. So it goes down, it goes down. Now a lot of people, what happened, everybody, is they chase that move down, everybody. And here's what happened. They retest one more time that resistance. Sometimes they retest the resistance a little higher or a little lower, everybody. It doesn't matter. What you have to understand is that retest of that move now is the lower high from the neutral point. So you have a cross, a recross, a retest. The key here is being lower high now. Now you have the best trade setup for the market, and I'll show you what happened on the ES, the SPY, all of them in a moment on my trade navigator board of all my futures stuff. Then what I saw, trade number 3 is a cross, recross, retest, is my favorite one. Because trade number 1, you have a 62% chance of being stopped. Trade number 2, you have a 58% chance of winning, you know? And trade number 3, now you push 60, 61, okay? And trade number 4 is the same. So you don't have a perfect trade, everybody, you know? You don't have a perfect trade, but look how you are going to read probabilities, Stephen. Look here. Now that's the channel trade. The channel trade works like this. And by the way, you got to understand that ping pong trade, because that ping pong trade, guys, is about 65% of your entire move during the year works like this. You have a break, you have a consolidation ping pong. Here, here. You have a break, consolidation ping pong. You have a break, consolidation ping pong. And most of the traders, what happened is they lose all their money on the consolidation here, and it doesn't even matter when they get the break. And as a matter of fact, I'm going to show you that the worst thing that you can do in trading and in probabilities is to short that break. Here's what happened. I call that net buyers and net sellers, and that's what the professional call them. When you look at your charts, everybody, you will always, and we are going to go through charts here before we do the options, the part of the options that is going to help the other option speakers after to transition with their stuff, is that if you look at the here, is this a net buyer or net seller here? Everybody, net buyer or net seller here? Correct, net buyer. It goes up, it goes up, it goes up here, and it goes to a resistance, and it gets sold. It's a net seller here. Then it goes back down, and here's crucial mistake number 2 from all the traders. And it's not just you. I have done this mistake many times in my career, and I still make it sometimes. And everybody that tells you that they are not making mistakes like this, they are full of shit. Does that make sense, everybody? But what's important for you guys to understand is what constitutes a shift of momentum, what constitutes a net buyer and a net seller ping pong zones. And so then you can understand, and then you start thinking differently about your support and resistance. And I don't care if you trade options, I don't care if you trade future, and I don't really care if you trade Forex. I trade mainly options, and I do some futures, because I know that's what's work. You know, I've been around the block 20 years. So I know I know with millions of dollars and a lot of blood and tears that this is what works. You know, and so you have to do what you are comfortable for you. If you are a good Forex trader, guys, trade with Forex. If you are a comfortable trader with futures, trade with futures. But personally, I've been around the block enough to know that options is the way to go most of the time with futures. Okay? So, and I do some Forex pair, don't get me wrong, but I do not day trade Forex. I do more of a position trade on the Forex. So look, so here the mistake number 2 that happens for everybody, guys, is this. When the market is retesting that support zone, Most of the traders look at this and say, oh, I got to jump in right now. The SPY, the ES is breaking down. Let me go. So here's what happened. The traders sell, and get what? It gets stopped. -2 points on the ES, because in reality, there was a net buyer. Now, what constitutes an horizontal line or a vertical line or a line? It's 2 points. The mathematical definition of a line, everybody, is 2 points. Do we all agree? Point A to point B, everybody? 2 points, right? So here's the trick here. The trick, everybody, is wait for those 2 touches to happen. The 2 touches at the bottom and the 2 touches at the top. Now, look at the probability. You got the top, it's a net seller again. So now the market is giving you what I call a net buyer, net seller historical clue. You have an historical behavior of how the market has behaved before. And it's a clue. You don't need my tools. You don't need my research for that. You can only open your eyes and see your market and your weekly charts and your 60-minute charts. Okay? And so now that you have 2 net buyers, net buyer here, and you have a net seller here, guess what? If you go back here and you try to short this thing here, what is the probability against you? It already proved you wrong 2 out of 3. Isn't it a 66% chance of being stopped if you go short here? Yes or no, everybody? And that third touch, by the way, is extremely important, everybody. Extremely important. It's mathematics. If there was a net buyer, Madhu, here, and here, if you sell here, the proven historical statistic shows you that you have only 33% of chance it's going to break. So you have 66, the inverse of that is 66% chance you are going to lose. So here's what happened. Now he goes and retests the cluster at the top, guys, for the 3rd time. Now is the time, guys. Now is the time you got to short this thing. Right there. And you short it by taking the high of either this top, S1, or this top, S2. And guess what? Now you have a 66 probability chance of success. That is how you trade cluster, everybody. That's it. And when it goes, here's what I do. I enter 50% of my size right there. And then when he recrossed the day trading zones, a 3rd time, with a 66% chance of touching here the ping pong top, now I'm adding another 50%. So my average price, everybody, is going to be around here. Now that compares with the newbie that chased the break here, and finally the break happened. But here's what happened, everybody, and this is where most lose money. Here's what happened. The guy lost 2 points here. He looked for the break. He said, now shit, the break happens. Another 2 points. And now shit, finally the break happens. And guess what? This move only gives you 5 points. Minus the 4 he lost, minus the commissions. Has the guy made any money? No money, guys. Yes or no? No money. So this is super, super profound. And this is how you trade support and resistance. Now, one more trick before I go to the charts, everybody. Well, let's go to charts. Sorry, I freaking hate PowerPoints anyway. So, can you guys see the charts? Now, that's my option chain. Can you guys see the charts? So let's go through example. And many examples you could look at my Ninja. What I do on Ninja with our stuff, and it's not about my stuff. It's about support and resistance, and I want you to master them. But I want you to see them in action, everybody. Okay? Let's pull, I don't know me, an SPY chart. This is Ninja. This is my trade navigator. My trade navigator has all the instruments that I trade 75% of the time, guys. I have the ES, the SPY to trade the options on the ES, Google, the Apple for my options, 6E for the Forex or FXE for the options, ZB for the futures or TLT, TBT for my options equivalents, crude for USO. Okay, guys? So, let's pull this chart here. Can everybody see that chart on the SPY? So, here's what happened. So, if we look at the trade setup that I gave you, the day trading zones here, and I made a video, I'll explain that before, but the daily trading zones, the top here was about 169. This cross and recross is number what, everybody? It's the number what? On the trade setup. You see, it's like boxing. You need to be super fast. Is that a support to resistance, resistance to support, or no? Is that a trade number 2, cross, recross? That's a cross and recross of that green line. Look, if I prolong that zone of 67.75 on the SPY, everybody, and I put a parallel line, which beautiful. I just screwed up my parallel line. Hold on. You got to love sometimes when you have technical issues, otherwise you take yourself a little bit seriously, right? Here. So can you guys see that? That's the prolongation. So now look at my pen. That's a cross and a recross. And look at what happened. You have 3 number 3s, retest. There's the retest here, lower high, just above the zone, but still over lower high than that zone. And look here, perfect number 3 on the zone at 67.75. And 2 weeks ago, I sent an email to the people who are on our database and have followed me for a couple of years. I had the SPY 68.5 puts on May 22nd. So May 22nd, exactly on that cross recross, right there, everybody. See, it's right there. May 22nd, I had 68.5 puts on those. So I was early, but the best trade, the safer trade is right there. Okay, is the number 3. So this is super important, everybody. Is that clear? Because what happened here is when you see those shift of momentum, you have to start seeing that the market is changing its direction. And when you see those direction, everybody, changing and those momentum changing, that's how you make the money. Number 3 is the big money maker. 67 to 59, everybody. You know, 59 something. This is huge on the SPY. Those are 4 to 5 times your money. And if you don't believe me, that's only a week and a half on the weeklies. Look what happened yesterday. That trade I took on Apple yesterday, guys. Yesterday, with an overnight that was losing money. Where was that screenshot? Right there. The reason I took that screenshot, everybody, is because I cannot show it to you today. The weeklies get out of my computer. They expired yesterday. I bought this thing 40 cents. It went to $3. Look, 1,642 in profit, and I had that loss there, open. That's it, you know? So this is key, everybody. If you mixed support and resistance setup that works with good support and resistance, I'm not telling you we have the best, blah, blah, blah. I'm not going to give you that bullshit. It works for us. It works for some prop shops. It works for people that follow us. But what is important for you is to understand those trade setup because they work again and again and again. Let's take some other examples. And it doesn't matter. And then after that, you overlay option strategies by selling time decay above and beyond to give a safety of margin. So let's go and look for other charts here. I don't know. Same on the ES. People who traded the ES, look what happened. So I zoom. That's my Ninja Navigator. Then we can go on my e-signal, look chart by chart. Look what happened. Same. See? Same pattern. And it should be because the ES correlate with the SPY. Cross, recross. You have the retest, lower high. It comes back, it retests lower high and recross the zone. Retest, retest. See, this is a retest. Number 3, number 3, number 3. These are the best trades, everybody. Because, again, looking for that top here at the neutral point is the most difficult trade. And that most difficult trade, I happened to do it on May 22nd. There's a video that we gave everyone 2 weeks ago, 3 weeks ago that is available. And we'll give it to you again on Tuesday if you have not seen it. Anyway, the point is that those work. So let's go over other charts, and you guys are going to tell me the pattern that you see. And let's do it. It's 12:30. We can go for another 10 minutes of charts, and then I'll give you the option strategies that give you the most for your bank and how you substitute for $1,500, everybody. $1,500, you can control 2 ES. Do you believe that? $1,500, you will control 2 ES, everybody, instead of using $10,000 or $8,000 a contract for the ES. Okay? So, this was my trade navigator. Let's go chart by chart. So, just that I explain everybody, the red lines are the sell zones, but really what we do usually, and that's what I was telling Mike. Maybe we'll reverse the colors. When those approach our sell zones, we look for a buy. When they approach our buy zone, we look for sell. Okay, and in between the orange are the neutral zones. Those buy zones and sell zones will do it only for 9 markets, which are predicated on our daily analysis research that we make, and they are predicated on our proprietary tools that are here. So what happens is we do all the work for you to give you the buy zone, the sell zone, derived from this here. Okay, our tools, and we use 2 MACDs. So everybody, do you guys use MACDs? Yes or no? And why do I use MACDs with the day trading zone support and resistance? The reason I use the MACDs, everybody, is one of my students and trader, and I work a lot with hedge funds. His name is Denis Morares. As a matter of fact, he's a contributor on the Real Traders webinar. He now manages an $80 million fund. When he first started with us, he had a very small fund of $20 million, everybody. The guy quadrupled his asset, and you see, I always give credit where credit is due. I'm not like, this is my indicator. I never use MACDs before I even talk to Dennis. And here's what happened. The can I write his name? Sure. Here, look. There's no secret. He's a contributor. If you look at the contributor panel on our website, the Real Traders webinar, and you see Denis Morares. He's a real guy. It's another BS fund manager. And his fund manager is Horizon Point Wealth Management. See? So how many speakers and gurus come online and tells you they work with hedge funds and give you the name and the company with who they work? How many, everybody? How many? None. Zero. Zero. Because the truth of the matter is bullshit. They don't trade, they don't work with anybody. Okay? So here is what? Here's what happened. Those MACDs, everybody, those MACDs, they are very powerful because they help you gauge the shift of momentum. See on Apple here, weekly MACD cross on the fast MACD, which you can own on your chart, 16.19.9, and the MACD 12.26.9, which is the slow MACD. When both MACDs are crossed, you have a shift of momentum. See on Apple, I had called the 400. It was a very important day trading zone around the 400. I called the 405, and he went all the way to 60 something, and I retraced back to the support, to the segment support, and to the dashes. So the key right now for me on Apple, everybody, and that's why I took that long on Friday. When Apple went to 432, guys, he went right to the bottom here at 34, guys. Yep, 34, 32 was the low. So again, they did a cross-recross because they took everybody's stop at the 44 level. And then I bought those 40 cents options that are right there. So again, it's another case where I put my money where my mouth is. And look, here, Apple for 40 call, 40 cents, boom, $3, 7 times your money, everybody. Can you guys see that? Quick yes, no. That's the trade I took on Friday. And again, the only reason that I snagged the trade, well, you have to do, Valerie, you have to do fit to screen. There's a button at the top. It's like a wiggle or something, and you click full screen, and you'll see that. So here's what happened. I took it at 40 cents, and it was $3. That's the power of options. That's the power of direction. Because what was my assumption here? My assumption is Apple finally doing a cross, recross, retest at 34, 33. Yes, and that's it. Me, when do I think Apple is game over? Apple is game over here, 420, 432, the previous low here. And you look at your cluster. Remember how we talk about cluster high, cluster low? If I put my line here, even if you don't have the tools, can we all agree, looking left and looking right, that this is an important level on Apple, everybody? Yes or no? Right there. 420. See, I can put it bigger, and you'll understand that even better. Yep. So here's what happened, everyone. See, here's what happened. See, there was a net seller here, net seller here. They finally crack it. Now this is becoming buyer zone. It's a support. What was resistance becomes support. Look here, support, support. They recross it here. They held it here. And that was a fantastic buy when they retested that for. They come back and cross and recross and retest. That's the third time. And you got to take it. And you need to do that, guys. You need to do that because this happens again and again and again. And in case you have not seen, I'm extremely passionate about it. Right? Does that make sense? So this is very profound. So now I'm going to go and show you. Do you guys want me to show you? Do you guys want me to show you one more thing? When you trade support and resistance, and I guess I have to show you maybe a 60-minute chart of Apple to better illustrate that trade that was 6 times the money on Saturday. And that's the problem. Okay. Here we go. So here's what happened, everybody. There's many places where you have a cross-recross. So let me show you a couple of things that we drill on support. Do you guys want to drill on support or resistance, or you want me to show you the options? Because I have about 3 minutes. But there's 2 option speakers after me. And they are good speakers too, and I think they are good traders from what I know. I know Dan and Larry. Okay, and if we have to, I'll do both. I'll try to do both quickly, but I'm being pressed for time now. So for the cross-recross, guys, you can have this. Listen, you can have a simple cross-recross. That's a one-time cross-recross. But listen, what happened here? You have to mix. You have to mix your cross-recross, everybody, with trade formation. What is a trade formation? That is a double top, a double bottom, yes or no? And a real double bottom, everybody, is a recross of the first bottom. Another double bottom, another chart formation at the top could be this. Look at the top of the dashes of the day trading zones. It could be a double top. They cross, they recross, they take you out one more time, they make a new high. That's a double top. They could go for this. Shoulder, head, and again the shoulder. Shoulder here, head, shoulder. So not only you have to combine your trade setup, cross, recross, retest higher highs or lower highs if you short, and the ping pong trade up and down, but you have to add the double tops and the head and shoulders to recognize that on your charts when it happens. Powerful, right? And the last thing when you trade at support and resistance that people fail is this. So let me clean my chart and I'll show you the last thing on support and resistance that most of the people trade. Okay? No, top and bottom, Sonny. If you go, listen to this. It's a clue that the speakers doesn't know what they are talking about. If someone tells you a double bottom and a double top is an equal, they don't know what they are talking about. The purpose of the double top and the double bottom is that the second bottom is lower than the first bottom. You know why, everybody? It's because it's exactly what I showed you before. They run what? The market maker and the professional, they know that you have your stop right there at the first bottom. So they run you over, which pushes the trade a little down. When they run you over, the market makers and the professional cover their position on your stop. And guess what are they doing next? When they start covering, it puts pressure back above the previous bottom. Right, everybody? And guess what? Now the buyers are coming, the professional gets in, and you have what I call a shift of momentum. Now you completely understand the shift of momentum, everybody. Make sense, everyone? Cool. Okay. So now, let me show you. Now when you go to the next stage, everyone, and this is very profound, and all those little tidbits can change your life. I mean, Norman earlier on was passionate. You know, I like people who are passionate. You know, people who come and give you their PowerPoint and blah, 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 blah. Who cares? Let's be on the real market. Let's trade real stuff. Let's be passionate. Because let me tell you, trading is not always easy, everybody. And if you are passionate about what you're doing here and you really want to get into the next stage, it's all going to be about proper size, proper money management, proper analysis with the zones, proper trade setup, proper recognizing the chart formation, and trading the right instruments to overlay probability at 68.95. When you have that pyramid clear, everybody, you have the recipe for success. So look what happened now. The last thing on support and resistance, if I clear all of this, is this. Most of the trader, what they do, everybody, and this one doesn't give it justice, but he gave it justice on my trade on Friday. We on the day trading zones major between the majors, the red 434 here, sorry, and the majors here, we have blue segments. Those blue segments, especially on the 60 or the daily or the weekly, they give me the retracement area, because most traders, what they do is they say, shit, double bottom in place, I chase. And what they do is they buy here. You see that end of the week right there? They chase that end of the week, and guess what? They are getting screwed, everybody, right there. Because what happened is the market always come back to that segment first, and that first retracement right after the break has the highest probability of re-entry. If you wait for the second break here and you wait for the second retracement, or it goes up again and you wait for the third retracement, on each retracement your probability of the success diminish, everybody. So you got, when you have a cross-recross, Valerie, you got to wait for the first retracement, Valerie. This is what's very powerful. It's to wait for the first retrace. Because a lot of traders are not fast enough to get those cross-recross or those retests right there, which is a perfect number 3. So if you are not very fast, got to wait the first retrace. Never ever chase the candle, everybody, especially on the 60-minute chart. You will get crucified, especially on Apple and the Googles. Oh my God, especially if you do options. Instead of doing 7 times your money, you lose 50% of your money in a matter of seconds. Okay? So now, let me show you a tidbit, and I'll show you much more charts Tuesday on the live event, but let me show you the next thing that I think is very powerful for today to take off, since I have about 12 minutes left. Can you guys see back the screen? Quickly, quick yes, no. Write that down, everybody, because a lot of people don't know that, and all professional knows, but unfortunately 90% of the retail public do not know that. When you trade, everybody, you have to understand the equivalence. There's a lot of futures traders in this room, and you have to understand the equivalence between futures and options, everybody. So write that down. 2 ES contract equals, just take it as balance of move. 2 contract on the ES equal 10 at the money weekly option on the SPY. Most of the time you can get those options between 60 cents and $2. So I get like an average around $1. Okay? And it equals to 1,000 shares. Now look at the capital requirement, and that's where it's very powerful, because you are going to understand now how to use properly the maximum use of your money. Now, if you were to buy 1,000 shares of the SPY, the SPY were 160 or whatever, on Friday, whatever it is, 164, 163, you would need $164,000. Nobody's going to trade there 1,000 shares of the SPY, because it's not, even if you have leverage, it's not the best use of your money anyway. Now look on the left side, you have the E-minis that have the same equivalence. If you trade E-mini safe, everybody, safe, I say, you would use about $10,000 a contract. $10,000 per contract, we're talking here about 2 contracts, that's $20,000 in capital requirement. So the ES is about 6 times, 7 times better than buying the shares, but look at this now, in terms of capital requirement. Here I use only $1,000, $1,000. So look what's left now. If I trade the ES with $20,000, I have nothing left. I put everything on the ES. But look now, if I trade right now on the SPY, look at this. I have $19,000 left here, right there, folks. $19,000 to redeploy either back to some futures, or to do more options, or to do what I call pair trades. You could have futures here, plus you could have options here, and you can do both. But now when you do only the futures alone, you are a sucker. So same control of the move with $1,000, you have $19,000 left. Now, let's look at the risk on these trades. Most of the traders on the ES use 2 points. 2 points to contract is $200, $100 times 2. Because I apply a 1% rule. You never, ever, ever want to risk more than 1% of your money at risk on any trades. Does that make sense, everybody? And if you don't understand, as we go through free webinars within the next few weeks with either Real Traders webinars or our day trading zones, you will understand. I'll explain that. I'll spend some time explaining money management with Michael. Okay, and what happened is if you risk only 100% of 1% of your money at risk, you have 100 trades, losing trades in front of you. The problem is the broker, they give you margin for futures that are ridiculous, $500. Well, if you risk $100 on a $500 stock, guess what? You just risk what? 25% of your money or 20% of your money? Well, 20% of your money, you are gone. You lose 5 trades, you are gone. Your $500 is gone, everybody. So here, you risk $200 for that trade. Look what I risk with the options. The same $200, 20 cents. So not only I'll use 19 times less money, but I have the same risk. Now look at the profit potential. On the ES, and that's realistic potential, guys. On the ES, usually if you are very good, you make 2 points to 4 points or even more. But let's say even if you make 10 points, $500, which is rare day per contract or whatever, and you divide by $20,000, guys, you barely make 2.5% return on your money, everybody. Look at this in the options. If the options move, everybody, they move 40 cents, $1.50, they become 40%, triple, double, or they become like this, everybody. Because that's not a BS trade. That's a real trade I placed on Friday and that I use for educational purposes here to show you the power of options. It's not to brag here. Where's the image? It's really to show you, to really make you realize that with very small amount of money, again, look at this image. Some people say they have a hard time seeing it now. You have to go on full screen, everybody. Hold on. Let me minimize that and minimize that. And let's see if we can have the image showing up again. And I want to, oh yeah. So let's see if I can zoom this image for everybody. Can everybody sees it better now? Yes, no, quick yes, no. Because all we need to do is the Apple, June 440, 3 contracts was left, bought them 40 cents, and the mark was $3. It was on Friday. This is a real trade. This is real money. This is not BS. So look, now here's the power of options. I had 9 contracts at 40 cents, everybody. 9. So you do 9 contracts is 900 shares, really. So 900 times 40 cents. My capital invested was $360, everybody. So question in this room, has anybody in this room $360 available in their bank account right now? Yes or no? Instead of blowing all your money in the futures. $360. Granted that you don't do 7.6 times your money every Friday, that you are lucky if you do a double, look at the power of options. 360 became $1,600, everybody. Powerful, no? Powerful. Friday, yesterday. You know? So what you have to do is realize the power of options. And again, it's for educational purposes. I don't want to seem like a bragger. If I was a bragger, I would do like others. I'll show you my $1 million account and say, hey guys, I made a $200,000 trade. No, I want to show everyone in this room with $360 on Friday with a very limited and defined risk, everybody. I did $1,642, 5 times my money. That's it. It's the bottom line. Okay? So now, okay? Now, let me show you something. So now let me show you an option chain that shows you the reality of just I talked to you with the options that expire next week. The reason I cannot show the trade on Apple here is because it expired yesterday. So I was out of it and all I could do is snag it. So look, options on the SPY expiring at the money, it's a 164.5. So let's say you buy the 164.5 put, everybody, entering next week. Look, did I tell you something that is not true? Did I tell you you can buy those stuff between $1.50 here? Yes or no? Look at this. Yeah? Right there. That's a real option chain, everybody. This is not BS. This is a real account. I'm not showing you a screenshot anymore. So with 10 of those, which is 1,000 shares, 10 contracts is 1,000 shares, times about 90 cents to $1.20. With $1,200, you control 2 years contract, everybody. It's right there. It's in front of you. And now look at the probability in the money, or the delta is the same. Delta probability in the money is the same. You take this number right there and you multiply by 100 and you have that number right there. And you, ideally, you can look at probability of success around 68% chance. Remember that bell curve I showed you? 68% chance and above, which means 1 standard deviation to 2 standard deviation. You would look at the trades around 165.5, or what you do is you look at the day trading zones again. You look at the day trading zones. I always look my charts first, everybody. I look at the zones on the SPY first, everybody. And look what I do. I look what is the most important zone in the day trading zones that I know could be important resistance. It's the 67 right there, the dash. The important support was right there for a long, 159.60, so the 160 calls. And you would have taken the 160 calls, guys, you would have done a lot of money, guys. You know, a lot of money. Huh? Lot of money. You know. Run, absolutely, run. Run. I saw that. I told that at the beginning. Run. I didn't make a fuss of it. There was a profit and a loss because, look, I was losing 230 on the open position left. But who cares? Run. Is that the net number? That's the net number. I was very explicit. I said I made this, and this was the open. Okay? Very explicit on this. Okay? So guys, I'm going to show you now. The last thing I want to show you about options and how you trade those at 98-95% chance of success next week. So just to do a complete example, because Mike is going to stop me soon here. You see that dash? Everybody see the dash at the 160 level on the day trading zones? Yes or no? That was 160 right there. I want to show you how the options behaved. 160 was the day trading zone. So all I had to do when I had the shift of momentum at 161 was to buy the 161 or the 160 calls. Look what they've done this week. Of the one expire next week, look what they've done. So I go down, and look what they've done. You go to 161, you go here, you see, and you do, and those were the out of the money one. And you do toss chart. See, now they have 89% chance of success. Probably at the time they had only 50-50 or 40% chance of success. You go here, toss chart, you go here, you open one, I don't know, maybe I can open it here, see what happens. Look at this option, everybody. Can everybody see this option? Look what happened. The a $1.50 option, and then he went to $4. It was about 3 times your money. Less than 3 times, 2.5 times your money plus. Does that make sense, everybody? That's the power of options. That's the type of stuff that I'm going to do next week with you guys live. If you want to come, Mike and the real traders on our team, they put a page for all the speakers if you are interested about anything from any of the speakers. And we have an ebook for you and training series videos. There's nothing to buy. I'm not giving you an offer. You come next week and see if you like our stuff or not. But the video and the ebook is free, and it will help you understand more what I've done here. The last slide I wanted to show you, and I think all the option speakers are going to go through this quickly, is this. It's called the power of time value of an options. And this is where I look with the zone and create safety of buffer. I will show you Tuesday because I have no time of showing you now. Where I take an options, I sell the options, I use the time value of this option. You see that red box. Let's say an option is worth $1, everybody. An option has 2 things. Let's say 30 cents of time value and 70 cents of real value. This time value goes to 0 by expiration Friday on the weeklies and by the monthlies. This goes to 0. That's how you make money. That's how you create weekly income and monthly income like the professional. 75% to 95% of the traders that are professional traders in the option market sell options. And I will show you next week what I do selling options and buying the weekly if you are interested, guys. I'm just running out of time. I just need to be respectful to the other speakers. I try in 1 hour, guys, 1 hour to give you some powerful tidbits from 20 years of trading. Tuesday, I will give you more. I promise. I'll give you more. No string attached. Just come and learn. You will learn. Thank you so much for being part of the community. Thank you so much also for being very understanding of that tech issue this morning with Guy and the people who have been supportive with us yesterday. You know, I'm going to tell you frankly, screw the room, screw the tech. It's all about the content. It's all about traders that trade real money. Believe me, those tech issues will never happen again. Hopefully, but you know, it's a real trader webinar. We are live. We are not giving you a BS pre-recording webinars. There's so many people, they have those perfect pre-recording webinars and you listen, you say, wow, everything is so easy, so good, so rosy. Well, we gave you the real stuff today. You take care, everybody. I'm looking forward to having you more in our stuff. Take care.
Hey, thanks. Great job, Mark.